I think in the next maybe 5 or 10 years, the whole global economy will undergo lots of uncertainties, rising geopolitical tensions, and then low economic growth. And all these three factors should be positive to the gold price as well.
Hello, welcome to Assay TV. Today we're talking with Samson Li, who is Senior Metals Analyst at Refinitiv Metals Research. Samson, great to see you here today via Zoom. Tell us, gold is at, I think, about 1950 US dollars today. What's your take on how high the gold price could go?
I think it really depends whether you're looking at it from a short-term perspective or a long-term perspective. I think there's possibly a short-term pullback. For example, like something we've seen that after the gold price touched maybe around 1980 or 75, and then it dropped back to 1907 before bouncing back again. So I think it is very normal if we have some kind of short-term technical correction in terms of the for the gold price. But personally, I'm not too. I don't think the correction will be too big in terms of the percentage wise, because I think right now gold is still one of the best safe haven assets available. And to be honest, I think it is still kind of underpriced.
Jay, underpriced at the moment. What sort of levels do you think it's going to reach?
Well, back in March, when I was writing an article about the global situation, about the COVID-19 and then the prospects of gold, I already suggest that we could very possibly see a price range of somewhere close to 3,000 US dollars within 2 years. That means in year 2022. Part of the reasons is because we think that obviously, due to COVID-19, right now the whole world central banks have been like issuing money in order to facilitate the economy growth. And then in addition, if you look at the Fed statements, they probably said that they do not expect the US will increase their interest rates before 2002. Year 2022. So that means, based on the Fed's forecast, they think that at least in the next 2 years, the US economic growth could possibly be zero or even still in negative territory. So in theory, I think this is very positive to gold. And at the same time, other than the Fed's balance sheet have been like increasing at a very fast rate, if you look at the pricings of other commodities like copper, silver, zinc, and oil, they have been like bounced back from the bottom by a very large margin already. Personally, I think right now the investment market is forecasting the global economy will fall into somewhere around like high inflationary or hyperinflationary environment, or even stagflation is a possibility. But either scenario will be very positive to the gold price.
So in terms of central bank buying, what's going on at the moment? China typically has been a big buyer of gold. What are the Chinese central bank doing at the moment?
Unfortunately, the Chinese central bank has not been doing much or increasing their gold reserves, at least if you go through the official figures. Also, when I go through the import-export data in the last few months, China has not been importing much gold into the country since maybe March or April. One of the obvious reasons is since April, when the Chinese economy restarts after many cities have been was undergoing like the complete lockdowns due to the pandemic, we see that most of the time the Chinese gold price have been actually trading at a much lower level compared to the US spot price. For example, like on the 27th of July, when the US spot price hit new historical high levels, at that day, the Chinese gold price was trading at actually a tad lower than 1,900 US dollar equivalent, which is about 44 US dollars per ounce discount. The large discount was mostly a factor of poor supply and demand dynamics. And as far as I know, many Chinese citizens think that the gold price have run too fast, too furious. And then so like they would prefer to step aside first, wait for the pullback, and then they will buy. Unfortunately, I think while there could possibly a pullback, the pullback could very short term and short lived. And I don't think many Chinese would be smart enough to take advantage of that short time frame to load up on gold. So I think from this perspective, I think the Chinese central bank may not be increasing their gold holdings in the last few months. But on the other hand, we should also consider that Chinese is a different economy compared to the Western world. So I think that one day, if the China central bank decide to, I have to increase my gold reserve due to whatever reason, I think it is very possible that the central bank will decide to print money and to buy any physical gold that all the banks in China that are holding. So in this way to increase the country's gold reserves. So maybe this is their last resort. But personally, I would still prefer they would be buying more gold like all this time, because obviously I think the relationship between China and US are not going to get better.
And what's your take on how the China-US relationship will impact the gold price? Obviously, there has been some talk about things like blocking some Chinese banks from having access to the US dollar clearing system.
Yes.
Is that something you take seriously, and what impact would that have on the gold price?
Yes, personally, I think the world in the next 10 years will be very different from what it has been in the last maybe 40 years. So that is definitely a very bad sign. And right now, the whole world is probably undergoing deglobalization or moving away from China, which already is the second largest economy system in the world right now. So I think in the next maybe 5 or 10 years, the whole global economy will undergo lots of uncertainties, rising geopolitical tensions, and then low economic growth. And all these three factors should be positive to the gold price as well. So as I mentioned, many Chinese are still waiting on the sidelines because they think the gold price is too high right now. But if the situation continues to get worse, both in terms of geopolitical risk as well as the Chinese or the global economy continue to be growing in a very slow rate, then in my opinion, people will get to buy more and more physical gold to hedge any risk, especially under the scenario I mentioned. I think many corporate earnings will be hit.
With a higher gold price, if we look back to 2011, the last time that the gold price was this high, it did trigger in the junior mining space possibly an expansion of the number of companies, the number of capital raisings. Looking back, some of which were of possibly dubious quality. What impact are we seeing in the mining space at the moment in terms of new companies jumping on the high gold price bandwagon?
Right now, especially the junior space have been doing very well. This is from what I see. Like when I was surfing about the stock forums, many people complained that, even stocks that have like questionable projects, the stock price have doubled or tripled because like they do some kind of marketing, and then the retails have been keep on piling money into companies they may not understand. So I think right now the market sentiment has been quite hot, especially the silver equities. From a valuation perspective, I think maybe the majority of the silver equities are not that cheap anymore. Although personally, I'm expecting there could be a sharp short-term price correction in the price of silver as well. But in the long run, I think history always repeats again and again. So while we are still in maybe relatively early stage right now, I would totally expect that there will be more and more companies which are now in other industry will transform themselves into gold exploration or gold mining industry in order to get more capital from the retail markets.
So still need disciplined stock selection when looking at this space?
Definitely. Personally, I think this time around, it looks to me that the market has been putting less emphasis on the quality of the management and the quality of the project. If you go through some cases, you can see that some of the best performance in terms of the stock price are most of the companies that hold projects are mostly in the low-grade materials. Obviously, we all understand why low-grade projects could be very attractive to some investors because they are more leveraged to the gold price. But sometimes I think, in the long run, I think quality of the management trumps everything. So I think for investors, other than focusing on the quality of the projects, personally, I would also put a lot of emphasis on quality of the management.
And how much at the moment, given that people are unable to travel easily between countries, how important is jurisdiction at the moment? We're seeing a lot of activity in sort of, maybe Western Australia or British Columbia, places where the miners and the expertise already is. Is that a trend you're seeing?
Well, I think the world is definitely changing in terms of geopolitical tensions and landscape. For example, obviously Western Australia is one of the best landscape looking for gold. The local government is very highly supportive to mining. So I think in general, Australia is still a very good jurisdiction for looking for gold equities to invest into. But I think people should also put in mind that because the relationship between, for example, China and Australia has been changing lately. So personally, I think the amount of investment from the Chinese in Australian mining industry could decrease relatively compared to other jurisdictions. From as far as I know, I think that right now, for example, the Chinese buyers, they have been actively looking for projects mostly in Latin America and West Africa in order to lower their kind of acquisition or jurisdiction risk in terms of the political sense. So I think these two areas are two regions that investors can focus on if they are more eager digging out some M&A potentials or opportunities.
Well, we've seen sort of Shandong Gold make a bid for Cardinal, obviously ASX listed company in West Africa.
China, yep.
And looking at the M&A space, what are your expectations in this higher gold price environment for the M&A space?
Well, I'm quite surprised. This year, we have seen that in terms of number of deals in the gold space this year, it has already been more than doubled than the number of deals recorded last year, particularly in the first quarter. I think this is a reflection that due to the macro economy as well as the consequence of the COVID-19, many people in the industry are very bullish on the outlook of the gold price. So like, despite of the COVID-19 situation in the first quarter and right now, many industry insiders are still very eager to do M&As. For example, like acquire a gold asset so that they could like increase their value in terms of shareholder size. And maybe once the pandemic situation improves, it will be easier for them to gather more money for development, for project development. So I think in general, the industry insiders have been pretty aggressive so far in the gold space. However, I think that because many buyers may think that the gold price is already at close to $2,000 level, I would suspect that the interest will cool down a little bit in the third or the fourth quarter. And the miners or the companies who are eager to acquire projects might shift their focus from gold to other metals, for example, like copper, zinc, silver, uranium. Because as I mentioned that earlier, that the market right now looks like it's forecasting there will be a high inflationary environment, and other metals right now, mostly base metals right now, are still kind of lagging behind. For example, while the copper price right now is already higher than the levels pre-pandemic, but many copper equities, their prices or the valuation is still below the pre-pandemic level. So I think there could be possibly be more M&A activities in the base metal space. Like the buyers could possibly get more value from that.
But in the last boom, 2011, 12, 13, we saw some big M&As which ended very sort of badly with some of the top CEOs being axed as a result. Have the mining companies learned some of the mistakes of the past?
This is a very difficult question. I think the companies, the management will obviously, they will continue to handle the situation with caution. But so far, to be honest, I still haven't seen one single deal that I think is like ridiculously crazy. Like obviously, I see some deals that I don't like, but so far, I still haven't seen a deal that I think is totally out of sense, or kind of like the buyer is too stupid to do this deal. So like based on that, I still think we are still maybe just in the halfway through the whole gold bull market. So like when the market sentiments or the bull run is towards its end, we can definitely observe two indicators. One, I think silver will have far more catch up to the gold price. So that means the gold to silver ratio will fall far lower to a far lower levels compared to currently is trading at. And the second indicator is we will see more and more ridiculous acquisitions. Usually these two indicators are signals to warn us that the gold bull run is coming to an end. But fortunately, I don't think we are anywhere near that situation. Although some short-term cool down is possible, and I think it's just actually healthy to the whole industry in the long run.
And how are mining companies performing in terms of costs? Again, in the past bull run, costs got slightly out of control. How are they performing so far?
Well, I think in general for the whole industry, their costs have been already rising since last year. But that is understandable because, as you know, like the more mining activities, the more expensive will be drill rigs, labor, and other cost of equipment. So like in the longer run, if, as I mentioned, that the whole world actually really enters into hyper or high inflationary environment, we have to be careful that the margin of the gold miners may not be always be able to maintain at very high levels, because like the cost, for example, like labor, copper, equipment, drill rigs will also increase by a lot. So this is why, return back to what I said earlier, why management is always the first and the most important factor that we'll pay attention to. Because if you have good management to handle the whole business with you, they will definitely be able to contain the increase of cost in a more effective manner.
And of course, with with gold prices being predicted to get above 2,000 fairly soon, even if costs rise, there's still a bit of margin there for the miners to play with. But thank you very much, Samson, for your insights there. It's been a very interesting look at the gold price and the mining sector. Thanks for joining us today.
It's my pleasure. Thank you.